with people with a bit more money, the answer is to rent attention from other participants. So what I mean by that is, like, if I can't do VC and I agree with your thesis and I like your kind of anti-cyclicality, I should subcontract the attention of that early space to you. You're going to do a better job. My job is sit on my tokens, do fuck all. If I can do that, that's great. That's why, we started Exponential Age Asset Management because of this tail stuff. We're like, I'm just going to give it to 14 hedge funds, one of the best hedge funds in the world. Let them.
After weeks of fear, doubt, and uncertainty caused by short-term obstacles like the German government selling 50,000 Bitcoin, the cryptocurrency market has recovered and is growing again. BlackRock's IBIT led with $26.2 million in inflows, followed by Fidelity's R21 shares RRKP and VanEck HODL with $61.1 million, $29.8 million, and $22 million in the 3 trading days ended Tuesday. On Tuesday, Twitter tweeted that Bitcoin ETFs received over $1 billion in inflows, a positive indication for the ETFs and cryptocurrency. Bloomberg ETF analyst Eric Balchunas said the ETFs outperformed his expectations in 6 months. In his tweet, Bitcoin ETFs gained $300 million yesterday and $1 billion for the week following one step back in June. The key metric, year-to-date net total, topped $16 billion for the first time. The first 12 months projection of $12 to $15 billion has been met with $6 billion. Eric predicts more multi-million-dollar ETF allocations in the coming days and weeks as the cryptocurrency market and global liquidity improve. Real Vision founder and CEO Raoul Pal agrees, especially on global liquidity conditions turning. Pal predicts fast asset price responses and large price hikes in all assets, from less than $2.5 trillion to $12 to $15 trillion. He expects Bitcoin, Ethereum, and Solana prices to treble. Pal's latest talk with Chris Burniske is summarized. Please like this video, follow the channel, and enable post alerts for more videos like this. Everything you do boosts YouTube's algorithm and channel growth. Thanks and enjoy the video.
I don't care what people's philosophies are. That's not how you make money. What you make money on is owning the best performing asset on a risk-adjusted basis. So what I tend to find is that the mid to upper part of the curve, which is networks gaining adoption, do best. ETH last cycle, Solana this cycle, and whoever it's going to be this cycle, whether it's Sui or whether it's Near or whatever it is, I don't know. We will see that, right? That is the easiest opportunity we get in this space to generate wealth. So firstly, focus on that. That's the do not fuck this up thesis. If we're going from 2.5 trillion to 100 trillion, do that, you'll make a lot of money.
Yeah.
And so then I just filter out as many people as possible. I really only get signal from a few people that I'll ever listen to. If you tweet something, I'll always read what you tweet because I think you'll have a high signal to noise ratio. Most people are high noise to signal ratio. And so I'll observe it for sentiment and any nuggets, but I try and filter out as much as possible and just stick with, unless something shows that network adoption is slowing, I'm right. So just capture that.
Right.
Then I don't FOMO in the rest. I just don't do it. So I don't spread. I did that last cycle. I tried to spread amongst this narrative, that narrative. And what I do now is really simple. It's idiot proof. I just put the chart against Solana. If something looks like it's a sustained trend against Solana, I'll allocate some capital to it. And again, only about 10% of my portfolio will I do in that kind of stuff. But you can make a lot of money in those. And so, that's what got me into WIF and Bonk because they were outperforming Solana. So I'm like, okay, I can do that. And now, if anybody shills me something, I just say, well, show me the chart outperforming Solana and I'll take a look.
Right.
That discipline makes it ultra easy for me because I think because of this everything code liquidity cycle, everything is correlated, every asset in the world, which makes it and it's all driven by the same debt refi cycle, which makes it, I think, the easiest macro risk-taking environment of all time. Because the central banks have also taken the left tail out by saying we can't let collateral fall too far, so we will debase currency. Holy shit, if this is the case, then we have the simplest, easiest risk-taking opportunity of all time. So hyper-concentrate, I think, is the way. Now, there are people who can do the tail part, hyper-concentrate and get it right. But the probability is lower, and then you break the first rule, which is don't fuck this up. Because if you get taken out in the cycle and lose your capital, and this cycle is going from 2.5 trillion to 100 trillion, that's bad.
Paul's main point is that since liquidity improved before the US presidential election in November, the cryptocurrency market will finally get the boost it needs to move from the boring zone to the banana zone. This is the part of every crypto bull market where prices suddenly go crazy and the market goes crazy. The CEO of Real Vision and a former executive at Goldman Sachs thinks we haven't seen that yet because the Federal Reserve wants to keep interest rates higher for longer to bring down inflation. However, traders are now 100% sure that the Federal Reserve will cut interest rates by September. According to the CME FedWatch tool, there are now 91.7% odds that the Fed's target range for the federal funds rates will be lowered by a quarter percentage point from the current 5.25 to 5.50% to 5% to 5.25%. Some traders think there are 4.5% odds that the central bank will cut by a quarter point at the end of its July meeting, and then again in September, giving a total of 100% odds that the Fed will cut rates by September. Rate cuts, maybe even stimulus checks, and the return of quantitative easing policies will start before the November elections. This will cause asset prices to skyrocket. Let's watch Paul's movie again.
Yeah, this is one of the tragedies that I see in the way in which social media, even though it propels crypto because it's intertwined with crypto, also it's a medium that's set up to mislead from the core of what crypto is. So it's like, I'm a little more boomer than you on a personal basis. Vast majority is BTC ETH Sol. And then of course I run a venture firm, right? And so we do make venture investments and, those.
Yeah. So you're actually set up the same way as me because you basically have a core portfolio of quality assets. The rest of your attention is focused on the tail, which is new
exactly
businesses.
Because the core portfolio doesn't need your attention, right? And I think that's one of the core things I think about for crypto at large is it's a way to better distribute capital. Because it's like for capitalism to work, everyone needs to become a capitalist in the sense that they need to manage capital of some kind. And I do think that, blockchains, it used to be you just had the major leagues of, call it liquidity. Now blockchains allow for single A, double A, triple A into the major leagues. And so there's a lot earlier distribution. There's a lot more granularity on what you can be a specialist in and the types of capital you want to focus on and do well off of. But you still invest in the indices, and the indices are BTC, ETH, and Sol, right? And you don't have to do much work at all. Sure, you can slosh around a bit through cycles to, juice the multiplication. But, going back to crypto Twitter itself and the way that social media and TikTok and Instagram and whatever is misaligned is it's like those mediums are so fixated on virality and the news thing and who's got edge and who can stand out in that way. And so it sucks 90% of the attention into those things. And 10% of the attention on the basics of BTC and Sol, whereas in reality, the portfolio distribution is the opposite.
Well, that's telling us the arbitrage is there, right? It's like attention. The fleeting attention is not quality attention. The quality attention is the attention that accrues to the activity on the main layer ones.
Yeah.
So it's kind of telling us that the more attention goes to memes or whatever the latest thing, airdrops or whatever, actually you're more likely to garner attention further, on the infrastructure layer. And maybe there's something within that. I'm starting to believe there's something a lot bigger in attention that we don't yet understand in terms of how we can use this as a major metric. Because I think what you're saying is something important as well, is when all the attention's on short term, you generally make more money on the long term. And if everybody's focused on Bitcoin, you're going to make more money in memes, which is why memes crushed it in the beginning of the cycle, because everybody was focused on Bitcoin, because that's what you do at the beginning of the cycle.
Exactly. Yeah. And, right now it's like, I look at BTC, ETH, and Sol on, weekly or monthly or whatever long duration charts, and they look great. They're like textbook consolidating, right?
Yeah.
But then, that they want to spring at some point here and we'll see when. But, then I go and I look on crypto Twitter.
Are you referring to the banana zone? That's on the chart.
I'm here. I'm here for it. Yeah. Banana Zone is a fun ride. But yeah, and then you go into crypto Twitter where the majority of the focus is on the new thing and the meme coins, at least right now, because those performed so well at the start of this expansion, and it's just utter destruction. And so it is this constant flip flop between, you know, where the fixation is and where the opportunity is. And I think, you know, what makes that so hard for us as monkeys that
As central banks start to cut rates and ease up on their quantitative tightening policies, Powell predicts an exciting time for the cryptocurrency market. The prices of crypto assets will either go through the roof or go crazy. This is the banana zone, and Powell thinks it could start at any time. Unlike some others, Powell is optimistic about the US and the global economy as a whole. And this optimism comes from the fact that central banks want to save the day. When there is even the slightest bit of trouble, they can't afford another global financial crisis, so they keep putting it off by printing money on a regular basis. Powell thinks this cycle will last until at least 2030, when he thinks AI and robotics will completely change the world. Until then, investing in cryptocurrencies like Bitcoin, Ethereum, and others will help people stay ahead of currency devaluation and debasement. What do you think about Raoul Pal's analysis and his predictions for the cryptocurrency market in 2024 and beyond? Please share your thoughts, comments, and observations below. And don't forget to give this video a thumbs up. Follow the channel and turn on post notifications to see more movies like this. Thanks for watching.